Doctor, we are from Group 10. We will present about Top Glove Corporation Berhad and Hartalega Holdings Berhad. This is the member of Group 10.
Good day, Prof. My name is Navinesh Amalaki Kalkesar. Today, I'm going to present about the introduction of this report. This report analyzes the financial performance of Top Glove Corporation Berhad and Hartalega Holding Berhad, two global leaders in rubber glove production, by examining key financial ratio, which is like liquidity, profitability, leverage, efficiency, and market value over 2021 to 2023, along with horizontal and vertical analysis. The studies evaluates their financial health, operational efficiency, and adaptability to industry demand. Top Glove serves as the benchmark, with Hartalega analyzed as a competitor. The finding aim to provide actionable recommendations to exchange financial stability, profi- profitability, and competitive positioning in the dynamic healthcare sector. Now I'm going to present about the business nature of Top Glove Corporation Berhad. Top Glove Corporation Berhad, founded in 1991 and headquarters in Malaysia, is the world largest manufacturer of disposable gloves, offering a wide range of products such as latex, nitrile, vinyl, and polyethylene gloves. With over 50 manufacturing facilities across Malaysia, Thailand, Vietnam, and China, the company exports to 195 plus countries, serving industrial like healthcare, food, and industrial sector. Its strategy emphasizes innovation, cost efficiency, and sustainability, leveraging R&D, automation, and environmentally friendly practice to exchange product quality and operational efficiency. Top Glove's vertical integration and diversification into healthcare products like face masks and condoms further solidify its market leadership and resilience. That's all from me. The next slide will present by my group member. Thank you.
Good day, everyone. Myself, Neeraj, son of Murugan. Today, I would like to talk about business nature Hartalega Holdings Bharat. Hartalega Holdings Bharat is a leading mission-based company that plays a significant role in the global rubber glove industries. Renowned for its high-quality latex and nitrile gloves, Hartalega also serves a wide range of industries, including healthcare, medical, industrial, and consumer sectors. The company's commitment to innovation and equality has made it one of the largest and most reputable glove manufacturers worldwide. At the heart of the Hartalega success are its advanced manufacturing facilities in Malaysia, which feature state-of-the-art technologies and automation, enabling high production efficiency and scalability to meet global demand. The company's gloves are highly regarded for their durability, protection, and chemical resistance, making them essential in industries such as healthcare, food processing, and pharmacies. Artelega's commitment extends beyond just manufacturing quality products. The company is deeply dedicated to sustainability, reducing its environmental footprint and enhancing energy efficiency across its production processes. Through continuous research and development, Artalega ensures its products meet evolving industries' need while adhering to international standards. With a strong global presence in over 50 countries, Artalega Holdings Bharat stands as a trusted leader in the rubber glove market, poised to continue contributing to the protection of healthcare workers and consumers worldwide. That's all from me. Thank you.
Hello Doctor, my name is Nur Shahira binti Malik. Today I will present about ratio analysis. For ratio analysis, we have liquidity ratio and leverage ratio. In liquidity ratio, we have three, which is current ratio, quick ratio, and net working capital. For current ratio, is meaning of current asset divided by current liability. For quick ratio, we have current asset minus inventories divided by current liabilities. For net working capitals, we have current asset divided by current liabilities. For leverage ratio, we have two, which is debt ratio and debt to equity. For debt ratio, we have total debts divided by total asset, and debt to equity, we have total debts divided by equity. In efficiency ratio, we have three, which is inventory turnover, fixed asset turnover, and total asset turnover. Inventory turnover is meaning frequency with which inventory are sold over the course of a specific period. For the method is cost or sales divided by inventory. For fixed asset turnover, we have is business organization for able to manage fixed asset in order to stimulate sale. For the method is sale divided by fixed asset. Lastly, total asset turnover, which is indicate how efficiently the total amounts of the company asset are being put to sale. For the method is sales divided by total asset. Last but not least, we have in ratio analysis, we have profitability ratio and market ratio. In profitability ratio, we have a gross profit margin, net profit margin, return on asset, return on equity. Gross profit margin is measure the company gross profit after deducting the cost of goods sold. For the methods is gross profit divided by sales multiplied by 100. For net profit margin, we have indicates net profit after deducting all costs and tax. For the method is net income divided by sales multiplied for 100. For return on asset, we have evaluate the company ability to generate profit from its asset. For the method is net income divided by total asset multiplied for 100. For the lastly, for the return on equity, it shows the profit generated from shareholder equity. For the method is net income divided by total equity multiplied for 100. In market ratio, we have a 2, which is earning per share and price to earning. For earning per share, we have for method is earning after tax divided for number of common share. For price to earning, we have market price per share divided by earning after tax.
Hi, my name is Jasmine, and I will talk about horizontal analysis for Top We can see the graph of the current ratio Top Corporation Berhad. In the year 2021, it records 2.03 times and increased to 2.22 times in the years 2022. A future decreased to 1.81 times in the years 2023. Next, graph quick ratio. In the years 2021, it records 1.44 times and a slight increase to 1.67 times in the years 2022. In the year 2023, a decrease can be seen to 1.51 times. Moreover, graph net working capital. In the years 2021, it has recorded 1,751,076 ringgit and a decrease to 974,345 ringgit on the year 2022. However, the company's net working capital will decrease again in 2023 to 764,168 ringgit. Graph debt ratio. In the year 2021, it records 22.87% and a decrease to 14% in the year 2022. However, there was a sharp gain to 16.31% in the year 2023. Okay, next, graph debt to equity. In the year 2021, it recorded 29.65% and a small decrease to 60.28% in the year 2022. A further gain to 19.49% in the year 2023. Graph inventory turnover. In the year 2021, it records 1.59 times and a small decrease to 1.39 times in the year 2022. A future increase has been recorded 1.72 times in the year 2022, indicate that the company significantly improved its inventory management, selling its inventory faster. Graph fixed asset turnover. In the year 2021, it was recorded 0.39 times and decreased to 0.14 times in the year 2022. Then decrease again can be seen in 2023 as it has recorded to 0.13 times. Graph total asset turnover. In the year 2021, it records 0.18 times and it decreased only 0.08 to 0.07 in the years 2022 and remains stagnant in the year 2023. Graph gross profit margins. In the year 2021, it recorded 13.71% and it decreased to negative 25.34% on the year 2022 and a slight gain to negative 12.06% in the year 2023. Graph net profit margin. In the year 2021, it records 12.78% and decreased to negative 24.92% on the year 2022. A further increase to negative 9.56% in the year 2023. Graph return on assets. In the year 2021, it recorded 2.24% and decreased to a negative 2.04% in the year 2022. In the year 2023, there was a slight rise to negative 0.67%. Graph return on equity. In the year 2021, it recorded 2.91% and a huge drop to negative 2.37% in the year 2022. In the following years, there was a tiny rise to a negative 0.80% in the year 2023. Graph earning per share. In the year 2021, it has recorded 2.32 ringgit and a huge decrease to negative 2.06 ringgit in the year 2022. In the year 2023, there was a slight increase to negative 0.72 ringgit. Graph price to earnings. In the years 2021, it recorded 30.17 times and a decrease to negative 33.01 times in the years 2022. In the year 2023, it has a slight drop to negative 80.56 times.
Good morning, doctor. My name is Fong Yan Yan. Now I would like to present about ratio analysis of Hartalega Holding Berhad. Hartalega Holding Berhad has demonstrated strong financial health over the past 3 years, with a current ratio of 4.72 in 2021, 6.42 in 2022, and 5.76 in 2023. These ratios indicate that the company has more than enough current assets to cover its short-term liabilities. Next, Hartalega Holding Berhad recorded a quick ratio of 4.11 times in 2021, which increased slightly to 5.76 times in 2022. In 2023, the ratio decreased to 4.84 times. A quick ratio above 1 indicates the company can cover its short-term financial needs. Next, Hartalega Holding Berhad record current liabilities of RM3146647 in 2021, which decreased to 202,72559 in 2022. In 2023, the liabilities further declined to RM19097992, showing a positive trend. Ideally, a company with lower current liability is in a better position. For Hartalega, the reduction in liabilities from 2021 to 2023 indicate an improvement in its financial stability. Hartalega Holding Berhad recorded a debt ratio of 17.43% in 2021, which decreased to 12.90% in 2022. In 2023, the ratio declined slightly further to 12.36%. While the company debt ratio has decreased over the years, the ratio still shows that Hartalega has more debt than asset, although the situation is improving. And then debt equity ratio of Hartalega Holding Berhad recorded of 21.11% in 2021, which increased significantly to 44.81% in 2022. However, the ratio dropped to 14.10% in 2023. Next, the inventory turnover of the company recorded 1.95 times in 2021, which decreased to 1.82 times in 2022. In 2023, the ratio further dropped to 1.12 times. This indicates that the company is holding its inventory longer than in previous periods. The fixed assets turnover of the company record 0.46 times in 2021, which decreased to 0.2 times in 2022. In 2023, there was a slight decrease to 0.22 times. A low assets turnover ratio generally indicates that a company is not using its assets effectively. Next, the total assets turnover of the company recorded of 0.14 times in 2021, which decreased by 0.06 to 0.08 times in 2022. In 2023, the ratio remained at 0.08 times. A low asset turnover ratio suggests that the company is not efficiently using its assets to generate sales. Next, the gross net profit margin of the company record 25.47% and decreased to negative 6.747% on the year 2022, and a further increase to 5.48% in the year 2023, when a high net profit margin shows that a company can effectively control the cost or service at a price significantly higher than its cost. And the gross profit margin of the company is recorded 32.95% in the year 2021, and it decreased to negative 6.61% on the year 2022, and it increased on the year 2023 to negative 1.88%. A high gross profit margin means that the company does very well in managing its cost of sale in year 2021. The return on asset of the company is record 3.62% and has decreased to negative 0.54% in the year 2022. In the year 2023, there was a slight rise to 0.43%. It means that when the company fall, the indicate of the company might have over-invested in assets that have failed to produce revenue growth. And the return on equity of the company is recorded 4.39% and a decrease to negative 0.62% in the year 2022. In the following year, there was a small rise to 0.49% in the year 2023. The number declining the Hartalega company is to become less efficient at creating profit and increasing shareholder value. And the earning per share in the year 2021 recorded RM 7.58 and a decrease to negative RM 0.93 in the year 2022. A negative EPS can indicate that a company is spending more than it's earning or losing money, so other metrics should be considered when evaluating a company's financial statement. In the year 2023, a tiny increase to RM 0.66, and the last one is price to earning. In the year 2021, it recorded RM 22.42 and a decrease to negative RM 155 and 0.92 in the year 2023. In the year 2023, it increased to RM 206 and 0.06, indicate that the company will perform high quality in the future. Company
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Nofazila binti Mustafa Kamal. Today I want to present about vertical ratio analysis for Top Glove Corporation Berhad and Hartalega Holdings Berhad for the year 2021. There are 14 vertical ratio analysis, but today I want to present about 4 of them. One is current ratio. The current ratio of Hartalega Holdings Berhad is 4.72 times, which is higher than that of Top Glove Corporation, which is 2.03 times. That means the Hartalega Holdings Berhad is more capable of paying short-term debt obligation. 2 is quick ratio. Quick ratio for the Top Glove Corporation is 1.44 times, which is lower than Hartalega Holdings Berhad, which is 4.11 times. That means the Top Glove Corporation do not have enough quick assets to pay off their liabilities. 3 is debt ratio. Debt ratio for the Top Glove is 22.87%, which is higher than Hartalega Holdings Berhad, which is 17.40%. That means Top Glove Corporation has a borrow hedge field and has higher financial risk. 4 is a debt of equity. The debt to equity of Hartalega Holdings Berhad is 70.43%, which is lower than Top Glove Corporation, which is 29.65%. That means Hartalega Holdings Berhad is using less leverage, and has a stronger equity position. That's all.
Hello, I'm Hartalega binti Hassan, and for my part is vertical ratio analysis for Top Glove Corporation Berhad and Hartalega Holding Berhad for the year 2022. For the first, quick ratio. Top Glove's quick ratio is 1.67 times, indicating strong liquidity, whereas Hartalega quick ratio of 5.76 times reflect exceptional liquidity and a higher ability to meet short-term obligation without relying on inventory. For the second, gross profit margin. Both companies face negative profitability with Top Glove at negative 25.34% and Hartalega at negative 6.61%, indicating that costs exceed revenues with Top Glove suffering a greater loss relative to sales. For the third, inventory turnover. Top Glove inventory turnover is 1.39 times, reflecting slower inventory management, while Hartalega's higher turnover of 1.82 times demonstrate better inventory management and quicker restocking cycles. For the fourth is return on equity ROE. Top Glove ROE is negative 2.37%, showing a loss in generating returns on equity, whereas Hartalega's ROE of negative 0.62% also indicates underperformance in delivering shareholders' returns.
Okay, I want to present about vertical ratio analysis, Top Glove and Hartalega for the year 2023. One is total asset turnover. Hartalega Berhad, the debt of equity is 70.43%, which is lower than Top Glove Corporation, which is 29.65%. Tells me Hartalega is using less average and has a stronger equity position. Two is a fixed assets turnover. Top Glove has a ratio of 0.13 times. Significantly, it produces 13 cents in sale for each dollar of fixed asset, whereas Hartalega ratio of 0.22 times reflect greater efficiency, generating 22 cents in sales per dollar of fixed asset. Gross profit margin. In the example given, the Top Glove shows a gross profit margin is negative 12.06%, which means it costs surpass sales revenue, while Hartalega margin of negative 1.88% indicated a comparable towards less extreme scenario, highlighting profitable issues for both firms. Four is a net profit margin. In the given examples, the Top Glove shows a net profit margin of negative 9.56%, signaling a loss, whereas Hartalega positive margin of 5.48% suggests that it keeps a share of its revenue as a profit, highlighting superior profitable in contrast to Top Glove. That's all for me. Thank you.
Hi Prof, my name is Kirandra, son of Virajan. Today I'd like to present about our recommendations about Top Glove and Hartalega. First, to improve the manufacturing process and lessen their dependency of manual labor, both business should be invest in cutting edge automation technology and artificial intelligence. Next, both business must be also improve their pitching strategy. Both companies should examine their pitching strategy to ensure they are maximize their outcome in current economy and environmental. Next, the second, both companies can reduce manufacturing process, improve the inventory control, and identify business allocation from more efficient sources in the order to boost the asset. Hartalega, Central Bahan, and Top Glove must be evaluate their current resources allocation plans for pinpoints area that require the engage to engage. The last one, then if a business maintain fair labor standard, ensure their workplace right are protect and maintain a safe and healthy workplace, its probability can increase with determine its financial plans. That's all for my part. Thank you so much.
Assalamualaikum. My name is Nur Shaidah binti Ahmad Shukri. I will present about advising company on optimal finding resource for business expansion. We have four. The first one is accumulate profit, strong internal resources. Top Glove saw strong profit during the pandemic and a bailing investment in production expansion, factory automation, and R&D for eco-friendly and low-protein glove. By relying on its cash reserves, the company avoid debt and new share issuance dissipate market challenge. And the second is debt financing, taking advantage of low interest rates. Top Glove caution approach to debt avoid liquid risks but miss growth opportunity from strategic borrowing. With strong finances, they could leverage long-term loan or bonds for ambition project, benefit from tax advantage and agility payment schedule, carefully debt calibration, and monitoring global interest rate and exchange rate without compromising financial stability. The third one is strategic partnership and joint venture collecting risks and resource. Strategic partnership with dash filler material supplier or medical institution can drive innovation, like biological glove with lower risk in use energy efficient production. Collaboration with suitable scientists and university may yield greener solution, reducing costs and expanding global market reach. The last one is equity issuance, a long-term source of capital. Top Global can raise capital for extension by issuing additional share, avoiding debt value, funding new plan, or entering global market. However, leadership must address stakeholder concern by presenting a clear growth plan, focusing on cost-efficient production and effective marketing to ensure long-term return. Thank you.
Hello everyone, my name is Siti Fatima Azhara binti Marzuki. Today I am going to present about the advice that we all gonna give for Hartalega company. The first one is retain earning, which is a basis for consistency. We all know that Hartalega company is very consistent and he survived for the pandemic during 2021 until 2022. So, retain earning can reduce reliance, external financings, and supporting innovative, which is technology. So, we all advises Hartalega to retain earning. Number two is debt financing, which is making use about the outrageous credit situations. We all advise for Hartalega company to make management for the repayments and interest rate to avoid a cash flow strain during the low profit time. Number three, we advise the Hartalega company to have a strategic distributions benefit and risk, which is Hartalega company can share its costs with other companies so that they can avoid anything happen and also cut costs for the R&D project. And last but not least, about the increasing capital without a debt. We all understand that a mix of debt, retained earning, and strategic alliance and equity will ensure a financial flexibility and maintain its global leadership in glove production. So that's all from me. Thank you.
For conclusion, Top Glove Corporation Berhad and Hartalega Holding Berhad face profitability and efficiency challenge in 2023 to 2024 due to stagnant global glove demand and rising production costs following the pandemic. Hartalega performed better in liquidity, operational capacity, and financial structure than Top Glove. To remain competitive, both companies should focus on cost optimization, product differentiation, and efficient financial management. Strategies include streamlining costs, developing high-value product innovation, and forming strategic partnership with technology firms, suppliers, and sustainable experts. Collaboration with academic institutions could also drive innovations such as biodegradable materials and recycling techniques. These measures aim to address challenge, enhance stakeholder value, and ensure sustainable growth in the glove manufacturing industry. That's all from us. Thank you.